Gary, Trump has essentially started a global trade war with all these tariffs that he's imposing on so many countries. For China, I think people expected it to be worse than it is. Is there any silver lining for China in this global trade war?
So for the case of China, what we see right now is that there are some tariffs from the US on China, but at the same time, there's also US tariffs on all the other countries. If there is a mistrust on the US by the other countries around the world, then it's possible for China to fill in certain gap from a geopolitical point of view. And beyond that, even if we look at it from the economic way, if a lot of these countries, they lose access to the US market, if they cannot sell to the US, it's possible to see them building a closer economic relationship with China as well. But of course, all of these are not fully certain, but at least it seems to be a window of opportunity for China to gain a bigger role in the geopolitical and economic issues around the world nowadays.
It looks like the US is leaving a number of spaces that China could step into, especially when it comes to climate change. Where do you expect to see China possibly filling spaces that the US has vacated?
So I think it's unrealistic to see China filling in all the gap that the US may have left in the world nowadays. But having said that, for certain issues that China would want to invest, want to gain a greater say, and basically can benefit from a greater influence, then obviously China will see that as an opportunity. So I think the most obvious one is definitely on the climate change, that China would use it green diplomacy to build a closer relationship and greater influence around the world.
Now, for China, this whole tariff war is just part two for them. Do you think they have relatively buffered themselves well enough for the second round, this 2.0 of Trump's administration?
A lot of Chinese firms have indeed outsourced or moved away some of the productions towards the third countries so that they can re-export to the US to tap on this market. The US is not the only market in the world, but it is an important one for a lot of Chinese firms, especially for the private firms and SMEs. So therefore, we do see firms trying to move around in the global supply chain to tap into this market. And second, from a national government point of view, there's also this greater push on the tech development so that the reliance on the US-led export ban will be actually less effective. So this ongoing investment in tech is also another point that China has been working on. When you look at the share of the R&D expense to GDP in China, it has actually already overtaken, for example, the case of Europe, both in the value and the percentage of GDP point. But what is different is also when you look at the restrictions by Trump this time, it's no longer only targeting made in China. There's also a lot of tariff being put in onto other countries as well. He's tried to persuade Mexico to also put tariff on Chinese products so that it can actually maintain its influence within the North American trade agreement, etc. So the US is actually also taking one more step to curb some of this rerouted Chinese goods as well from the global perspective. One thing that is very different in 2018 versus right now is the concern of overcapacity by different countries. Europe or even ASEAN countries, Latin American countries, they're worried about Chinese goods flushing towards their space. So all of this basically means that China have prepared, but the new development is also very complex that China's preparation may not fully address these concerns.
Rising tariffs, do they sink all ships? And it becomes a case of which ship is the best off in a bad situation?
We do see that a lot of governments are now using the concept of security trying to implement their own industrial policies, have their own capacity in producing certain goods, especially in the strategic products or etc. At the end of the day, I think the competition will simply be much tougher. And of course, for the large market, it's possible to see them using their market power to force the other country to produce in their own space. For the case of China and the US, they may have a bigger market power to do so. And for the other countries, they may all end up as losers.
The deglobalization, doesn't that just make products more expensive for all consumers?
Well, in the short run, yes. It's simply because when there are tariff and supply chain cannot adjust that quickly, then obviously prices would go up because either the companies or the consumers, they will need to absorb this higher tariff. And second, we will see companies greater demand in investing in more plants and building more capacity. All of this means that they need to spend more money.
Supply chains are so important, and even if you are an American manufacturer based in the US, your raw materials are coming from all over the world because some of those raw materials are just not available in the US. I mean, what does this mean for them?
Well, it basically means that prices will go up. But right now, it's a situation that the US is taxing everything, including the products that the US is not producing. So therefore, I think if the US companies really need those components to produce a certain goods and sell to the US consumers, it's pretty much that either the company or the consumers will need to absorb that extra additional tariff. So yes, definitely prices would go up in the short run. But of course, in the long run, it really depends on how the situation evolves, because things can really change overnight nowadays, and it's very unpredictable. If there's something that is not available in the US, then even there's no way that it can be produced, then eventually the US will need to work with some other countries. So eventually, I do think that there should be some sort of agreement between the US with other governments in renegotiating maybe a certain trade deals, etc., to smoothen the trade flow a little bit.
Could we possibly see a lowering of trade barriers between China and ASEAN?
I think it's possible that we will see a closer trade relationship between China and ASEAN, and even without all this trade restrictions, then we already see Chinese firms there moving to ASEAN because of the lower labor cost and land cost and etc. But with this greater tensions, then if some of the ASEAN countries, they find it harder to access the US market, then I think it's natural for them to find other market to collaborate, and China is definitely one of the market they would have in mind.
Exactly. And do you think China might have a higher chance of getting into the CPTPP?
Well, if we see a closer environment from the US side, and if other countries are trying to maintain the current order of the free trade, I think it's possible that China would be able to join some of this other agreement simply to fill the losses from the US. The CPTPP is quite different from some of the other trade agreements that we have seen in the past. Clauses not only targeting the trading goods, but also services and also other issues on subsidies. So it is actually a stricter trade agreement that China will need to fulfill all of these promises compared to the past.
With Europe now in the crosshairs of Trump, and with the EU pushing back hard with tariffs of their own, could trade barriers also be lowered further between China and Europe?
One obstacle that actually prevents China from building a closer economic relationship with the EU is really on the issue of Ukraine that has remained unsolved and difficult to solve. So unless there is really a more obvious solution to that problem, or if China really change its stance on some of this global issue, it's quite difficult for Europe to switch massively towards the China side in building a closer economic relationships.
Which industries and areas could Europe collaborate with China?
So if Chinese firms are willing to invest in the green initiative in Europe and help the green transition, I think this sort of investment are still welcome.
Could China's stock market benefit in any way from this trade war that is happening?
Well, if you look at the Chinese market, one of the key characteristics is that it's quite uncorrelated to the world. China is kind of insulated because it still has capital control. Capital is not moved freely, and then also because of the great domestic demand, so a lot of companies, they may not have that much overseas exposure. So if we do see capital flowing away from the US and find other safe haven, then China can actually be one of those that the investor would perceive it as a way that, well, maybe is less correlated to some of the risks that they face elsewhere.
And which industries do you expect will likely see more inflows into them?
It's quite certain that the Chinese government will have a very strong support or subsidies towards the tech sector in terms of the R&D and also the domestic substitution story. So China's tech sector will probably benefit from what is going on around the world. And second, if China really needs to boost domestic demand, so it will need to invest more on infrastructure. It can ask local government to invest more, to issue more bonds, but it cannot really force consumer to spend. So infrastructure will be the second one that investors would see that as a safer option. And third, I think for consumer services, it will remain as a key winner from this changing consumer spending pattern, because nowadays people do not really want to buy or spend much money maybe on luxury products and automobile, but services is still something that they will need on a day-to-day basis.
How long will it take to undo any damage caused by this trade war?
If the end goal is really to bring everyone towards the negotiation table and for a new trade agreement, then maybe the damage may not be that big in the long run. But if there is really no agreement, then obviously we can imagine that all this tariff can stay longer. I think the pain may get a bit longer. So yeah, I think this is really a structural change that we see in the world nowadays. So I would say that we probably need to be ready for a world that prices may not be as low as before. The average inflation growth may be higher, and then that could also have an impact on the longer term economic growth as well.